and please join us in welcoming Parker Merritt from IBM.
Thank you so much. All right, so having just met y'all, I'd like to quickly ask for a favor. I'd like to gauge my audience's understanding of blockchain. So just a quick raise of hands, how many of you have not heard of blockchain or Bitcoin prior to this week? Very few, right? It's been around for a while, almost over 10 years. How many of you have ever used cryptocurrency or Bitcoin or know someone who has? Okay, so a few more. So it's definitely becoming more mainstream, but there's still a lot of misconceptions about Bitcoin and blockchain. When I first told my mom I was interested in Bitcoin, she thought I was dealing drugs online. So a lot of these misconceptions have been around for a while, but I just want to talk you through the history of Bitcoin and blockchain and explain to you that the big picture is a little bit more than that. So just to start off and quickly intro myself, my name is Parker Merritt, and I'm a technical solution specialist at IBM. Essentially what that means is I go into businesses and help them integrate data and AI solutions into their systems and processes. So while my work is mostly focused on AI, also very interested in blockchain, and I do have a degree in mechanical engineering from University of Florida as well. Can I get a go Gators? Anybody? Yeah, I figured. I know I'm in enemy territory, that's fine. So, I'll just talk a little bit about how I got interested in Bitcoin in the first place. My senior year of high school, a millionaire day trader came into our economics class and offered a simple proposal. If we could pitch him a stock that he should invest in, and he found it compelling enough, he would co-invest with us and share the profits. So I wrote up a short paper detailing a small, obscure 3D printing company called Organovo. Not a great stock, don't really look into it, but I did make a good bit of money off that first trade, and ever since then, I've been super interested in finance. But the deeper you get into stocks and investing, the more you question the underlying foundation of the monetary system in the United States. So that led me down the Bitcoin rabbit hole eventually. And eventually it inspired me to work at IBM, as I see IBM as a leader in this space. But just to illustrate my obsession with Bitcoin to you, here's me in October of 2018 on Halloween, which also happened to be Bitcoin's 10th birthday. So my costume was the Bitcoin white paper. It wasn't the best costume at any party, but it illustrated a little bit my commitment to this technology. In addition, I also named my cat Finny after the first recipient of a Bitcoin transaction, despite my girlfriend's wishes. And you can find him on Instagram. I just posted a new picture, so go and check that out. And finally, everybody at IBM knows just how obsessed I am with blockchain. Here's a picture taken by a friend on my way back from an IBM event. And I've also got the Bitcoin white paper hanging up in my cubicle. So all around, although AI is what I practice professionally, blockchain has always been a big passion of mine, in addition to finance and investment. So just to detail a little bit about what I'm going to discuss here today, we're going to go over cryptographic hashing, public key cryptography, and Merkle trees. Who's excited? Yeah. All right, you're all nerds. Come see me later. This is not what I'm going to discuss. What I'd like to detail instead is a little bit more of the narrative side of Bitcoin. Most blockchain presentations contain this kind of information, talking about technical architecture, but what really pulled me down the rabbit hole was the story of Bitcoin, some of the more mythical elements of its origins. So that's what I'm going to discuss today. So just to give a little bit of context, how Bitcoin evolved in this digital world, as we all know, many of our digital institutions today are essentially monopolies. You go for search in one place, you go to social media in generally one place, and most people shop online at Amazon. So I don't even need to name these companies, you recognize these logos, right? Now, in contrast, there's forces of decentralization pulling in the opposite direction. For example, there's 3D printing. I have a 3D printer at home, and what this has allowed people to do is manufacture and prototype their own products within the confines of their home or garage. So this is a revolutionary technology that's kind of pulling in the opposite direction of centralized factories. In addition to that, we have renewable energy. People can now produce wind or solar power from their rooftops. So again, allowing people to take a little bit more control over the ownership of their assets. And finally, blockchain, the emerged relatively recently and started out in finance, but is slowly permeating throughout every industry and changing the fabric of how we do things. So, what is a blockchain? I've talked a little bit about how I'm obsessed with it and what it's going to do. If you look on Wikipedia, this is the definition. Again, it talks about Merkle trees, cryptographic hashes, but what this really means is that Bitcoin and blockchain are a shared permanent transaction ledger. That's all you need to know. It's a permanent record. So I'm going to go through the 3 stages of how Bitcoin and blockchain evolved through history. Number 1 would be decentralized money, the first of which was Bitcoin. The second would be decentralized web. And the third is decentralized industry, which is where IBM's main focus is in this area. So let's start with decentralized money. As you all know, the internet has allowed you to explore a variety of niche interests. Whether you're a furry or you worship the devil, you can find a like-minded community online, no matter how weird you are. So a group of people in the 90s called the cypherpunks decided that they didn't like the way that government was handling a lot of different things. They were super interested in encrypted communication and messaging, and they were also interested in a non-government form of money. They prototyped many of these technologies to simulate money, but most of them failed. And you have to understand why they were looking to do this by examining the background of financial manipulation in the United States. For example, in '71, President Nixon ended the convertibility of dollars into gold. Prior to then, every dollar was backed by gold, and you could go to the Federal Reserve and exchange your dollars for something that was physically backed. So this ended in 1971 with Nixon, and the dollar was allowed to float freely against other currencies. And what this led to is a lot of manipulation from the Federal Reserve in terms of the stock market. In 1987, after a brief stock market crash, the Federal Reserve chair decided that he would tell investors he would protect them from downside losses. This was known as the Greenspan put, and it allowed investors to take a lot more risk than before. And this culminated in the real estate crash in 2007 due to excessive risk leveraging and manipulation of financial markets. And finally, the Federal Reserve decided to start purchasing stocks and bonds at unprecedented levels, which inflated the US dollar and devalued the currency. So a lot of people were not happy with this trend. And in 2008, on the night of Halloween, a man named Satoshi Nakamoto, whose true identity is unknown, posted to a cryptography mailing list. He wrote the Bitcoin white paper, and he told everyone he had coded it himself just to see if it could work before he released this news. So this was a bit of a niche idea, and it had been attempted a couple times before, but Satoshi had one main innovation, and that was something called proof of work, also known as mining. And this innovation essentially did 2 things. Number 1, it ensured that a network of computers around the world, anybody who wanted to opt in, could confirm transactions. So this essentially meant that there were hundreds of people around the world at any time checking your transactions, making sure that the Bitcoin that you're sending is actually in your account. So that was the first innovation of proof of work. And the second thing was that people had to invest in specialized computers and use a lot of power to mine, which ensured that everybody had skin in the game with Bitcoin, which means if they were to commit fraud in the Bitcoin ecosystem, they would lose a lot of money. So these 2 things were ensured by Satoshi's proof of work innovation. Now, a couple months later, Satoshi finally got the Bitcoin network off the ground with the Genesis block. This Genesis block essentially was the first bundle of transactions to happen on the Bitcoin blockchain. And within this blockchain message, he also included a note about the headline of a newspaper from that day, which not only essentially time-stamped the blockchain and showed the world that this record was happening at a particular time in history, it also showed that Satoshi was extremely political in his intent. He didn't like what the banks were doing, and this was his call to the world to rebel against the existing banking system. So a number of events happened following this, and Bitcoin grew very quickly. In 2010, a developer named Laszlo purchased 2 Papa John's pizzas on a forum for 10,000 Bitcoin. And for those of you who haven't been keeping up with Bitcoin's price, this would be worth about $100 million or more today. In the following year, a man named Ross Ulbricht, under the name the Dread Pirate Roberts, created the Silk Road Anonymous Marketplace. Here you could use Bitcoin to buy drugs, hitmen, weapons, Bitcoin's decentralized nature pretty much allowed you to transact anything freely without the fear of the government interference. Now don't pull out your phone, the Silk Road is gone, but there have been many copycat markets to pop up in its place. And finally, in 2014, one of the biggest events in Bitcoin's history was the collapse of Mt. Gox. Mt. Gox was originally a Magic the Trading Card game exchange online, but soon it became a Bitcoin exchange and held the majority of Bitcoins in the ecosystem at the time. But this illustrates one of the big dangers of letting other people hold your Bitcoin. 850,000 Bitcoins were stolen from Mt. Gox, and it subsequently collapsed. So these are all important events in Bitcoin's history, but the thing it's most well known for is its meteoric price rise. Now, this is a little bit outdated in the last couple days, but if you had invested $1 in Bitcoin when it first started trading, you'd have about 90,000 today. So that just illustrates how quickly and how massively this market has grown. So when you look at a stock that's had this much success, you have to think, okay, what does this do to? Is it an incredible, talented CEO? But in the case of Bitcoin, the leader is actually unknown. Satoshi, remember, is an anonymous man who posted to a cryptography mailing list. He didn't want his identity known. But Newsweek announced that they had found the identity of Satoshi Nakamoto in a man named Dorian Satoshi Nakamoto. And Satoshi was a man who lived in California. He was Japanese like Satoshi. He was an engineer for a software corporation. And he was a libertarian, so he had these kind of anti-government views that clearly Satoshi Nakamoto from Bitcoin shared. However, when approached about Bitcoin, he stated that he had never heard of it and that he had been retired for years. And most experts agree now this was not Satoshi's true identity. However, suspiciously, just 2 blocks away lived a man named Hal Finney. Hal Finney was also an engineer and a bit of a nerd. He was a health nut. He gave out health food on Halloween and ran marathons regularly. And he was also pretty active on social media, and you'll note that only a week after the Genesis block was created, Hal Finney was also running Bitcoin. Now, Hal Finney was not new to the world of cryptography, and he was also the first recipient of a Bitcoin transaction, so that's why I named my cat Finney. In 1993, Hal also had proposed a name for crypto cash called Crash, which I think is honestly much cooler. We should all start calling it that, cryptocurrency. But in 2009, Hal was so optimistic about the future of Bitcoin that he predicted that the price of each coin would soon reach 10 million per coin. Incredible amount. Unfortunately, Hal would never live to see it because he was diagnosed with ALS. And in 2011, he retired from his job at the IBM Corporation, and Satoshi happened to disappear around that same time. And unfortunately, in 2014, Hal died of ALS, froze his body, and Satoshi's coins have yet to move. So, is it a coincidence? Maybe, but I believe this is Satoshi's true identity, and if Hal were to ever come back, this would have a huge impact on the community. So, we've talked a little bit about Bitcoin's history, but what is Bitcoin for? What is its intended purpose? One theory is that Bitcoin is essentially a substitute for digital gold. So it shares a lot of properties with gold, such as it's got a limited supply cap. There will only ever be 21 million Bitcoins mined. And you can see the size of this addressable market by looking at gold's market cap, $9 trillion. That's the price of all gold in circulation, compared to Bitcoin's less than 200 billion. So if this is truly the use case, then clearly a lot of upside. And in addition to this, these are both non-correlated assets. They don't move with stocks or bonds. They're completely independent markets. Another theory is that Bitcoin was created to fight inflation. Now, we take it for granted in the United States because we are the world's financial capital, but in other countries they don't have things like Venmo, Cash App, PayPal, and they're also subject to much higher levels of inflation. Recently in Venezuela, this stack of cash is used, you weigh money to transact in Venezuela because the currency has faced runaway inflation. So their money is now essentially worthless. So a lot of people point to Bitcoin as the solution to this problem, saying an independent currency could free these oppressive regimes from runaway inflation. Finally, a third use case is simply people want to innovate commerce with Bitcoin. So there are a lot of startups out there such as Lolly, which gives you cash back on online transactions in the form of Bitcoin. There's also a company called BitRefill, which allows you to purchase gift cards and pay-per-use phones with Bitcoin. And there's even an online chicken feeder where you can send Bitcoin transactions and see somebody's chickens fed in real time. So basically, you can create almost anything you want and transact freely on Bitcoin. So what makes it Bitcoin? This is just code running on somebody's computer, right? So what's to say somebody couldn't replicate this and call it Bitcoin without it being truly the cryptocurrency? And this is all based on consensus. So if everybody in the network agrees what the rules of Bitcoin are, then it works perfectly. But on occasion, somebody disagrees. And when this happens, they'll say, fork it. Now, this is pretty controversial in the crypto world, and it's known as a hard fork. This is essentially when somebody says the rules of Bitcoin need to be different, and they create their own independent community. So this has resulted in a variety of different Bitcoin forks. We have the original Bitcoin, which is the most popular today. There's also Bitcoin Cash, Bitcoin SV, Bitcoin Gold, Bitcoin Diamond, and so on. There's literally hundreds of these. So if you want to make a change to the rules of a cryptocurrency, it's very easy to do so. But the big point here is that Bitcoin is about freedom. Bitcoin allows you to transact drugs online, escape from an oppressive regime, or create an automatic chicken feeder. You can do pretty much anything you want because the code is online, open source, and free for anyone to use, no matter how good or bad their cause. And this freedom has also led a lot of people to create their own versions of not only Bitcoin, but other altcoins. So some examples of this are Litecoin, which is supposedly the silver to Bitcoin's gold. And it was created with a specific use case of facilitating faster transactions on Bitcoin. Bitcoin sells every 10 minutes, Litecoin 2.5 minutes. Also there's Monero. It's an untraceable currency, whereas Bitcoin is completely public. Anybody can see any transaction and the size of your transaction in Bitcoin versus a Monero. This is completely masked and hidden away. Finally, there's Namecoin. This one no longer really exists, but this was one of the first ideas to apply blockchain technology to something other than just currency. They wanted to create a decentralized domain name system. So instead of a .com, you'd have a .bit or something to the tune of that. So what this led to is an idea to not only create a decentralized money, but a decentralized web. So you can see how this unfolded in the explosion of altcoins that existed between 2013 and 2017. Initially, there were about 50 coins. The total market cap was less than 10 billion, and 95% of that market cap was Bitcoin. Whereas in 2017, there were suddenly thousands of coins. The market cap had exploded in size to $60 billion, and only 40% of that was Bitcoin. So what happened in this time? This handsome fellow is Vitalik Buterin. He is a Russian-Canadian programmer, and he created Ethereum, which is the second largest cryptocurrency today. And he initially got the idea for Ethereum when playing World of Warcraft, and he had his gold seized by Blizzard, the company that created the game, because they had deemed the way he obtained the gold unfair. So this was just one of the worst things to happen in Vitalik's life, apparently, because he changed course and decided to develop Ethereum, which he called a decentralized world computer. It was the same thing as Bitcoin, but it ran code rather than simply transacting in currency. So this kind of code is called a smart contract. And you can think of smart contracts as the digital equivalent of a vending machine. With currency, you simply transact in it, but with a vending machine, when you put your money in, something happens. Some kind of functionality is enabled. So smart contracts were the core innovation in Ethereum. And this led eventually to the ICO bubble, because smart contracts allowed people to create cryptocurrencies at will with very little code. No mining or anything. So the ERC20 token was the first standard on Ethereum, and it allowed for people to create all kinds of different tokens. And these were sold in large crowd sales, and ultimately they raised over $5.6 billion in 2017. So this was a huge explosion in the cryptocurrency market. And Ethereum, which is around 200 today, soared up to 1,400 from its original price of about $10. So this just showed you the massive scale that the ICO market enabled people to reach. So to go into a little bit more detail on what smart contracts allow you to do, here are some examples. Augur was one such token created on Ethereum that allowed users to predict the outcome of real-world events. So, for example, if you wanted to place a decentralized bet on whether or not Donald Trump is going to win the 2020 election, not taking a position here, but if you wanted to do so, you could do so on Augur. Additionally, there's another one called Storage, which allows you to essentially rent out storage space on other people's computers. And another similar one called Golem that would allow you to purchase idle computing power. So let's say you have an intensive process like rendering a 3D video, you could rent out computing space on somebody else's computer with a Golem token. Finally, one of my favorites is CryptoKitties. And CryptoKitties was a collectible marketplace for breeding and trading unique digital cats. And this one is actually not an ERC20, it's what's known as an NFT ERC 721, essentially a crypto collectible. And this was the first CryptoKitty, and eventually this market got so red hot that people were purchasing them for hundreds of thousands of dollars. A little ridiculous, but this one's name is Dragon. And you could also, because this was a decentralized layer, people would be able to build other games connected to CryptoKitties on top of this layer. So here's a crypto racing game where you could port in your CryptoKitty and challenge your friends to races. So smart contracts enabled a lot of innovation because they enabled additional functionality. But with additional functionality came a large amount of complexity, and this caused a lot of problems in the Ethereum ecosystem. It reduced security in some cases, it reduced scalability in some cases, and eventually the ICO market crashed to the tune of 90+%. So now the Ethereum community has primarily shifted its focus from building dApps to creating what are called DeFi applications, decentralized finance. They're essentially trying to emulate the existing banking system through smart contracts with things such as stablecoins. Now, Bitcoin is very volatile, goes up and down a lot, whereas stablecoins maintain their value based on fluctuations in supply and demand. So that's one thing they're attempting to do now. Also, they're creating lending protocols. So instead of getting money from a bank, you can apply to lend money from a smart contract and a large pool from a community. And finally, investment is also another subject to tackling, where you can purchase a coin that automates trading. So DeFi is now the primary focus of the Ethereum ecosystem. And with all this action going on, it was sure to get the attention of some very large investors. So you may recognize this man as Mark Zuckerberg. And when he saw the potential for gathering more financial data in addition to the personal data on Facebook, he decided that was a game he wanted to get in. So he created the Libra project. Very similar to the stablecoins I mentioned earlier, Libra is intended to be a stable cryptocurrency with no borders. So people could send remittances anywhere in the world and send money through Facebook Messenger. Now, obviously, Facebook doesn't necessarily have the best reputation. Congress called into question whether or not it was a good idea for the Libra project to go on. And this is a big question now. Is Libra a true cryptocurrency? Is it decentralized? Now, the Libra Association has a large number of members who are pitching into the project, such as Facebook, obviously, MasterCard, Uber, Visa, Spotify, PayPal, etc. Very large tech companies, and they want to get in the game of money. But as increased pressure came from Congress, a lot of partners started backing out. So this goes to show, again, one of the big problems with creating a centralized cryptocurrency. It's very easy to put pressure on Mark Zuckerberg, whereas Bitcoin has no leader to put pressure on. So we'll see how this unfolds in the coming years. But again, this just illustrates how decentralization exists on a spectrum. You have Bitcoin on one end, Libra on one end, and Ethereum somewhere in the middle. And Bitcoin has very few authorities. There's no one that can influence how the code is changed very easily. Whereas Libra has many authorities, many large companies that have a stake in the game. Ethereum, again, somewhere in between. Bitcoin is slow to change because you have such a large community to rally around new ideas, whereas Libra can change rapidly because it's pretty much under the watch of a single entity, which is Facebook. And Bitcoin transactions are almost completely irreversible, whereas Libra transactions by nature have to be reversible because Congress will not allow people to send money for terrorists, for example, or drug deals through Facebook's network. So these kind of compare some of the most distinct differences between decentralized and centralized cryptocurrencies. Now finally, I'm going to talk a little bit about IBM's big interest area, which is decentralized energy. So when you look at some of the aspects of blockchains and cryptocurrency, you have to ask yourself, who else could benefit from things like greater transparency or automated record keeping, seamless exchanges, all these things that blockchain and Bitcoin have allowed? And the answer is almost everyone. So almost any industry can benefit from these aspects. And that's why the Linux Foundation created and IBM adopted a system called Hyperledger Fabric. So we wanted to create a pro-business blockchain with a modular architecture built primarily for privacy and control over your data. You don't want your data just out there because it's very sensitive business-related data. But you also need something modular that you can code in almost any language. So IBM has taken a big position in making this the blockchain for business. Some of the business benefits of Hyperledger include its permission. So whereas in Bitcoin anybody can join the system, with Hyperledger, you have to dictate who the members are. It's private, so you can hide sensitive business data. It's scalable, so it doesn't rely on mining, which is a very compute-intensive process. And there's a lot of trade-offs to all these things, but this is primarily for business use cases. And finally, it's customizable. You can use almost any popular computing language rather than, for example, C, which is what Bitcoin was built in. So, and IBM is in a really great position to start these blockchain initiatives because blockchain initiatives require a network of people. You want to work together with people in your industry. So IBM is great at facilitating this because 95% of Fortune 500 companies are IBM clients. 10 out of the top 10 banks, which will be one of the biggest users of blockchain, are also IBM clients. And we've been in business for over 100 years, so we have a great track record of revolutionizing business the same way that we're hoping to revolutionize it with Bitcoin and blockchain. And as a result, we are the #1 enterprise blockchain partner, and we have over 400 projects going on right now. So you can see how IBM's network effects have enabled us to create a diverse blockchain ecosystem. So to go a little bit into the use cases that this has enabled, you may remember a few years back, the big romaine lettuce scare. People were worried about a virus that was going around based on some disparate sources of produce. So they wanted a good way to keep track of where their food was coming from. So we partnered with Walmart and we created the IBM Food Trust. So now, from farm to table, anybody who works with Walmart is required to track every step in their supply chain with a blockchain. Additionally, we applied the same concept to global trade with a partner called Merritt, and we now track shipping containers going across the ocean throughout the supply chain, keeping track of regulations and customs and the contents of each of these containers. So it's allowed for greater transparency in global commerce as well. And finally, back to Bitcoin's roots of decentralized finance, IBM is sponsoring the WorldWire initiative. Currently, when you transact in the existing banking system, it takes hours or even days to settle a transaction. We're hoping to use blockchain to make those transactions instant. And what's the most interesting thing about this last approach with WorldWire is that it combines not only IBM's internal Hyperledger project, but also public cryptocurrencies. For example, companies can now send Stellar, which is a public cryptocurrency, through IBM's Hyperledger network. So this illustrates a new approach for enterprise, and I think this hybrid approach is going to take a much larger role going forward with the rebellious communities of cryptocurrency collaborating with enterprise. And that's what I find most inspiring about blockchain today, is how it can bring people of different backgrounds together. And I hope this presentation has also inspired you. There's some references. Thank you so much for your time and attention.